5 reasons why Warren Buffett cannot invest in Tesla / won't invest in Tesla. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. I wanted to also shout out to our Patreon supporters. We greatly appreciate it, and it definitely allows the channel to exist and prosper. We're in our countdown to the entry to the S&P, and we're going to have a lot of shows focused on preparing for investing and trading this environment because we expect it to be extremely lucrative, and I think that very beneficial in the process. So one of the things that just happened, or a note on preparation, we do have our trade consulting where we assist you in the process of doing your trades or investing through this period, because I think there's an opportunity to make 5 or 10 times your money if you're focused and if you use good fundamentals. So something happened a couple of days ago. One of my trade buddies and I were having a conversation about the fact that, well, it looks like there's a number of data points that suggest that Warren Buffett has a large amount of cash from his Apple sale, and that he's actually considering purchasing a large stake in Tesla with those funds. So I listened to him and I was like, it's a great idea. He does have the money. He does have a lot of capital he has to put to work. But in essence, we found that there is a large number of this ain't gonna happen for a reason. And we're starting to get some rain here. So I have to plan B it real quick. Wow. And there aren't even any, there's no clouds above me. Interesting. So what we wanted to review today is, what are those 5 reasons? The first item that comes to mind is the former CEO of Wells Fargo was a gentleman named Carl Reichert. So Carl had a thing where he had a meeting with Warren Buffett to do some planning for so Warren Buffett was going to review management philosophy and plan to determine if they were going to buy a large stake in Wells Fargo. Mr. Reichert was actually late for that meeting, and at that point, eventually they did get in on Wells Fargo, but after he was late for that meeting, Warren Buffett called off the meeting and also called off their potential investment in Wells Fargo. So I bring this up in this case because what he's really saying is that once you've made a commitment, especially on time, how seriously does your organization take that commitment, and do they execute it as well as possible? And so the answer that Warren was coming up in this case was, you don't take your time commitments as a firm seriously is the beginning of a sign that your organization is decrepit, not well organized, not well planned, especially with a meeting of the magnitude of him coming to visit. So I want to bring this one up because, particularly when it looks at the Roadster and the Semi, there's a commitment Elon has made to them, and there's a lot of commitments that we've seen come and go related to the fact that Elon had good reasons why he sort of changed his mind and what happened. But in essence, the first item is Mr. Buffett focuses on operating fundamentals, and one of them is time and timeliness. And so what he's doing is using the guide of how you manage your commitments as a firm to actually assess whether or not the organization is well structured and well optimized to perform. The second, and really what I should cover at the end, is the fact that, speaking of that timing issue, now if you look around at the companies that Warren has been investing in, there's a concept in business that's called bet the jockey, not the horse. So there is venture capital, which they don't do, and Then there's investing beyond that. So at venture capital, they're really establishing the firm, determining if it's viable in the marketplace, and et cetera, and sort of walking down that line of thinking. So sort of the next deal is if you look through the companies within the portfolio of Warren Buffett, what you'll find is that he has a situation going where so there's a constant question mark as to who will replace Warren Buffett as the head of Berkshire Hathaway. And nobody has that answer yet. But one of the things that's going on is there's actually a horse race going on right now between the long-term managers of different businesses, including the businesses that have been bought by Berkshire Hathaway. Those long-term managers are excellent, have done very well for their firms, hence one of the reasons why he either bought large stakes or bought the company outright. And so what's actually happening is that there's sort of a fashion show going on where the management teams of each of those companies is demonstrating on a daily basis as they execute for customers whether or not they deserve to be still in the Buffett portfolio, as well as how well they're managing assets in order to deliver performance for everybody involved. That's the shareholders, that's in this case Berkshire Hathaway, that's also customer delivery, etc. So you'll notice that he tends to invest in long-term businesses that have an excellent footprint and defensible environments, but they also have management teams that are very, very well grounded. In particular, what just came to mind on that one is that GE just had a lot of problems, and it was just articulated by Warren Buffett that he's really proud of the structure of their organization, because in the case of GE, they make a point of training their executives well and also cycling them through a number of positions over their careers. In the case of Berkshire Hathaway, Warren was arguing that their model for structure of company might be better than GE's because they rely on managers to stay in a business, in an industry over the long haul. And he believes that that long haul presence is part of the reason why those businesses are profitable and successful. And GE's model of moving everybody around all the time and keep retraining has merit, but clearly that model is kind of broken down, and large conglomerates like that have to figure out which model they're going to follow in the future, and Buffett is arguing that his is a better one. So in this case, again, we get to the point of what does the management team look like? How well structured is it? Does it have good fundamentals? Elon has done a great job of running the business, establishing it and running it to this point. Elon is a half-time CEO in terms of his schedule relative to other businesses that he's doing. And the other challenge is that the management team, there's a management team there, but Elon is really relying on physics management where you establish a long-term goal, you hire smart people, and then they run the business as a process. And so those operating fundamentals really don't fit the process by which Warren Buffett tends to operate in terms of selecting and investing in firms. So I kind of bring this up because, another point on why he can't invest there. Now, the other, I think Apple actually was a very profitable solution for Buffett and company. And I was really stunned when they made that investment because he tends not to do technology. He tends not to do start-up-y type companies. And we have to say in this case that was a change, that was deviation from the norm of how he does investing. So I kind of bring this circumstance up to you because, Apple was very established at that point, with the Android space and what Apple was doing. It was really an oligopoly for the business. And so there's an established position. So this sort of brings us to the next concept, which is Tesla has done well and they've built up a nice business. The problem right now, though, is that if he was going to invest in Tesla, it would have been a year, maybe 2 or 3 ago, when the competitive landscape was clearly completely Tesla's win. We now have a circumstance where there are a large number of competitors that are preparing and going to enter the space. And in the case of Rivian, in the case of Lucid, all of these competitors are entering a fairly young market space with some really good products. So as a result, it looks to me that this could be the worst time for a Buffett type investor to come in, and he's very fundamental value oriented. And so when you look at that, you have to say, oh, okay, you guys have done well, the company has grown nicely, etc. But wait a second, what you're facing right now is some of the biggest companies in the world that are very, very well capitalized coming after you, and your management team and structure is a little bit shaky. So even though you have superior technology, that's why they say bet the jockey, not the horse, is that excellent jockeys can ride horses that aren't as well organized to a win. I'm thinking about VW, I'm thinking about Mercedes, I'm thinking about Toyota. A lot of those entities are excellent riders, and they just haven't had a horse that can compete with Tesla thus far. But once their horses get improved as they're doing, it's going to be a game changer. So these are several reasons, and we could go on, but in essence, Warren Buffett's a value investor, and the core part of value is you're investing in the management team, and management teams that are part-time are not the type of structure that value investors want to see. They want to see full-time, full-on management teams, and even if Elon can't be there, the management team in place has sort of limited authority to get everything done. And I think that it puts the company in a zone where they're saving money in terms of paying managers, but on the flip side, there's a lot of things going on that a dedicated full-time management team, would be helpful. Even succession planning. What happens to Elon if something bad happens to him, like COVID or some other issue? There's a lot of who's going to take over, who's going to run it efficiently type questions out there. And great businesses, they don't operate like that because they have a COO, they have key managers that can be upgraded into the slot, even if they wanted to look for an outside entity to come in and run it. Now, one of the weird things about Buffett is that if you look in his portfolio, there's a lot of insurance services. And what I'm really thinking about is Geico. And so while on the front end, we're arguing he's not buying a large stake, on the back end, he actually is going to buy a large stake. And that's because among the most popular ways to invest investment dollars related to insurance or other dollars is indices. So I wouldn't be surprised if 3 to 5% of all the money in the S&P is Warren Buffett related companies. And as Elon and company enter the S&P, there will be an investment absolutely by Berkshire Hathaway, because I'm just talking about Geico. There's a number of other insurance entities within. And we aren't even discussing the pension funds of a large number of those firms and how much they have invested in the S&P. So through the back door, there's actually going to be a very large investment by Berkshire Hathaway / Warren Buffett in Tesla, but not through the front door. And the main reason is that Warren Buffett is a focused value investor, and the structure of the firm and your operating fundamentals are a critical component of whether or not he actually will put dollars at risk in that organization. So now, could this change? Absolutely. I mean, if Elon and company decided we're 40,000 employees, we're going to completely change our management structure to reflect excellent fundamentals. Now that's a different party, and that's actually the Apple story. As we didn't have Steve Jobs and guiding things, I mean, Apple has its own internal university that it uses to train employees and executives. And so I just think it's a really huge deal, in terms of how and why a value investor like Mr. Buffett might invest, and why it is that he ain't investing in Tesla on a straight head basis, but he is definitely investing on an indirect basis because a lot of the entities that he helps to manage use index funds. In fact, if you think about it, the NASDAQ 100, there are a number of funds that that he has exposure to through the investment entities that sort of subordinate to the level that he's at, and indices are a part of it. And things like the NASDAQ 100, for example, is one of the indices used by money managers to leverage returns. And I would not be surprised if, there's some of that in there, and therefore he owns Tesla indirectly because of those indices. But again, not directly. And I thought the comment was kind of interesting when it came up, because it was a suggestion this would be a big boost for Tesla right away. And it would be if that happened, but it hasn't happened thus far. And given the time before S&P, I'm confident it is not going to happen for now, for the reasons we just covered. So I want to thank you for taking time out to visit with us here. I just want to remind you on our trade consulting as we go into earnings announcement. Also wanted to encourage you with your health tips. First, don't forget, no more than once a week fried foods. Number two, at least 25 leg lifts a day on each leg while seated in a chair with a 5-pound ankle weight on. Just lifting each leg 25 times is a way to strengthen your quad muscles. Also wanted to encourage you to not go to bed within 4 hours of eating, minimum 2, let the food digest. That way the stomach acids don't digest you. And don't forget our lovemaking tip, which is at least have a salad or something light prior to, as a way to enhance the quality of that experience. We also want to thank you again for joining us. Tschüss, German, au revoir, French, Hebrew, Hoda Hafez, Farsi, Namaste, Hindi, India, Zdravstvuyte, hello in Russian, Ni hao ma, hello in Chinese, Ohio gozaimasu, Japanese, and Assalamu alaikum, Muslim, Dobrý Russian, Hey Do, Swedish. And in Jamaica, we say, enough respect, walk good man. Thanks for joining us. Have a great day. Bye for now. We look forward to our next conversation. And let's go Tesla. Let's see some nice numbers as we head into the S&P. Have a great day. Bye for now. And thanks for joining us.